As the market gears up for its next move higher, one corner of the market is quietly lighting up with a powerful setup, the kind that has historically led to explosive upside. When this area moves, it moves fast, and that means big opportunities for you. In just a moment, we'll break down exactly what we're seeing and reveal our top hand-picked stocks positioned to benefit. Stay with us as the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Janine Cox, joined by senior analyst Philip Tortevsky and Pedro Vinales, and we're Wealth Within. Good evening.
Good evening.
How are you today?
Good. We're back together, you and I.
I know, it's exciting.
We're the only two left.
Yeah. Just the two of us.
No, but Pedro's joining. But yeah.
Pedro, welcome. How are you, Pedro?
G'day, guys. Good to see you guys again. Yes, very good, very good. Ready for some good stocks.
Oh, we've got a lot to talk about today, haven't we? And so many exciting stocks that people are really going to love. So let's dive straight in. We've seen a big push from our major players this year. But is there a segment of the market that is now flashing opportunity? Phil, you've got all of it for us, haven't you?
I do. We're going to get into the chart in a second and have a good look at what I'm talking about. But, it's the Small Ordinaries Index, which is what we're going to take a good look at, because really our market, earnings season has shown us one thing, that our big stocks are driving 2026, the top 20. And let's get to the charts, because I want to really dive into what I'm talking about here and show you. This is the XTL S&P ASX top 20. This is the Small Ordinaries Index. Look at the vast difference. Here we have February, pointing at new all-time highs, breaking through to 5,200. That's the monthly chart there. And February in the Small Ordinaries Index has actually fallen away. And I mean, this, I don't know if you've been, on top of it, but this earnings season has been brutal for stocks, missing slightly, getting hammered. Zip got hammered 38% and it just missed earnings.
Amazing. So do you think that the Small Ordinaries is actually leading the overall broader market, or do you think it's lagging?
I think right now, based on what we're seeing with that chart, if we just go back and have a look, it's actually come off. So right now it is lagging. It's the big players that are leading the market. But when I see and I zoom in a little bit more in terms of where the opportunity may lie, because this is the question you've got to ask yourself now, at what point do these big players like Rio, like CBA, let's say in 2024, not an example right now, but you've got Rio, you've got BHP. At what point do these stocks become not a great buying opportunity for the short to medium term? Especially if they're looking vertical. You've got some of the other miners, gold players that are literally looking like this.
We'll see all those calls come out now that they're overpriced.
Yes.
The market will be looking and doing a shift into these smaller stocks. That's what you said.
Well, that's where I was getting to, because where is the value going to be next? And, you shift one over to the Small Ordinaries Index and you take a look at that chart in terms of what it's doing right now in the short time frame. And this is really getting exciting and interesting to me. It's a real strong form of consolidation. It's at a previous important level, and the market's come off, unlike the top 20, it's come off almost 10%. So that's a very healthy correction and where opportunities could really start to form. So that's why I think today's show is so timely and really exciting to find that next winner in the Small Ords Index.
That's wonderful. And look, a nice setup like that, seeing it move to that high, do you think it will do make the next move in the short term?
I think right now is the time to get prepared more than anything, because what this is alluding to is that there is some real, compression starting to happen. And if this market starts to take out 3,800, then I think the plays on the cards in terms of pushing back up to 4,000. If we do take 3,800, then definitely I see a move up to 4,000 and beyond for the Small Ords.
And you've got some exciting opportunities in that sector to show us.
I do, and look, I can't say it's just me. Pedro's picked a few good ones here as well, so we've got to give him the credit.
Okay, fantastic. Now, you often hear investors looking to be sector-specific, like gold, for example. Right now, are there any sector-specific stocks or sectors that people should be looking for with the small cap stocks? Pedro, you've got it all for us. What have you found?
Well, the story for this year is resources, miners and energy, basically. From the stocks that we've picked, there are some very nice standout ones. Obviously, the precious metals have already moved, gold and silver, but we've also got other resource stocks that basically haven't performed as well as the big players, and it's usually the big players that run first, and then the little guys follow suit. So definitely this is the time to be looking at them. Basically, it's a resource story. and energy on my research anyway.
So you're saying that energy is the pick. Now, we've heard you talk a lot about this sector before, so you're sticking with that. Is that right?
Oh, definitely. I mean, Phil and I have both, covered energy a fair bit this year, because it's now's the time that it's actually starting to move. And if you're not looking at it now, you're going to miss out. And really, the news comes out basically when the market has matured and when it's already in an uptrend. And that's when everybody wants to participate. But really, the smart plays, get involved before that move happens.
Wonderful. Thank you for that. Now, I can't wait any longer. I don't know about you, but let's get into the stocks. It's stock time, Phil.
All right, fantastic. Let's go. First stock we have is LAU. Now, this is Lindsay Australia, which most would know in the small cap space. But this is very interesting because one look at this stock and it does give me that cyclical type feel, right? But it has been appreciating over the last couple of years, which is really interesting to see. I want to zoom the monthly chart out.
They've just reported a good solid report, a nice dividend.
Yep, not too bad. I mean, look, especially in this space when you don't see too much volatility, there's been much more volatile periods than this just this month, which is when the reporting came out. So that speaks to your point that it's been accepted well by the market. But where I think this gets exciting, because we have seen a pretty serious correction, but we're moving into this important level. For me, 60 cents is the level that if this stock holds and reverses from, and it gives it reason as to why it should, right? Oftentimes, you see, and I've been speaking to a few traders recently, believe it or not. It's an interesting thing talking to other people.
With the mentoring.
Yeah, I'm used to being, for all these years, trading alone, I'm used to being a mute at home in front of the computer. Now you speak to somebody, you think, oh yeah, that's cool.
Now you're helping other people too.
Which is nice. And they're helping me because you get a different perspective. But going back to this chart here, what I have been seeing is people are so quick just to buy a stock as it's falling. It's falling, I think it's cheap, and it may be cheap at 20%, maybe cheap at 30, maybe cheap at 40, but at what level is it really likely to make that move or find the support? That's where the context side of things comes into it. And for me, I think we're there with Lindsay. 60 cents, something should happen around here. Yeah,
I mean, it's interesting that the chart shows that it's turned a corner when fundamentally the company's turned a corner. It's put its growth plans in place and now it's just got to make the most of those. The only thing with these types of stocks is often the debt can be a little bit high. That's one thing that I'd be watching, especially this point in the overall market cycle. But if the news is good, which it was, it's paying a dividend, which is great, ticks a lot of boxes, and the chart looks good.
Yeah, and more than anything, at the end of the day, regardless of story or fundamentals, what's the optimal risk-reward scenario? Because the reality is, if we go back to that chart, you might not get an opportunity like this again for the next 5, 6, 7 years. I mean,
well, the chart shows that, right, over the history.
Yeah, and so yes, we had this real euphoric spring up. The sellers have come in quite strong, which is not always the best thing in terms of, but following parabolic moves, on a move back down is very normal. Now, if we hold 60 cents, just be mindful that you are buying after a significant correction if you're looking at this. So giving it a bit more confirmation would be a nice little thing to do. And I mean, there are some arguments to say we're almost there. So this is definitely one that goes on the watch list, and if it can break above 60 and start running back up, then a move back to at least $1 looks very likely.
I like it. Now, the next stock is STN. Pedro, would you like to have a look at that one for us?
Yeah, sure. So STN, that's a gold miner. It's one of the junior gold miners. So if you feel like that you've missed out on some of the big gold miners, this one could be setting up for a nice move up. And let's start with the monthly here, because really this shows the overall larger picture. And I sometimes joke that you can just show this to a preschooler and they can tell you whether it's going up or down, because basically we've seen that period where the stock has been going up and it's going down, and now which way is it going? Basically it's going up, and it's been going up since 2023. So this is why sometimes technical analysis doesn't need to be so so difficult or so complex. You can figure out those moves. We always talk about price, pattern, and time. And really, if you master those, that's where you can really become that master trader. So going to the weekly chart here, we can put all this together and form that picture of this that uptrend that's recently happened, and have a look at the volume that's come into it recently from April 2025. It's just the biggest volume that this stock has ever had in its history. It's only had 2 spikes back in 2020 and 2021 to that level, but now there's a lot of liquidity there, and that's really what you want as well in a stock. You want to be liquid. You want to have buyers that are willing to buy your share if you want to sell it. You know, that's something that a lot of people miss. They think that they can just buy something and automatically you can sell it in the market, but there is another party on the other side that has to buy your share. You can't just sell it to nothing. So on that note, liquidity is very important, especially when it comes to these small cap stocks. So the fact that this is growing, this is very comforting in that sense. And the fact that it's now maturing, you can see that the bars are different. It's just looking a lot different than what it was during this down period. Look how gappy and illiquid it looked back here. But now it is looking like a mature stock. There's an interesting pattern that's forming around here. I'm sure our students in Module 5 will understand what I'm talking about. And really, this is on the verge of a possible breakout. Now, as traders, we need to be prepared for 2 scenarios, whether it breaks to the upside or the downside. So always take that note. Always look at both scenarios, because we could get a little bit biased when we're looking at something and get excited and think that it's going to go our way. So basically, the lines in the sand, in a simple way that I'd put, is 58 cents. If it breaks that, then we're going up. If it breaks 44 cents, then it's going down. But this one is looking quite interesting. It's a bit range bound at the moment, but if gold goes for another run, I'd be definitely looking at this one.
Now, it's no secret that you like energy. It's also no secret that you like these precious metals ones as well. In terms of a stock like this, I mean, students talk about the benefit all the time to me about how they look at patterns on charts now and can just see things differently. So, and in reporting time, how important is that when we're hearing either good news or bad news, the stock jumps one way or the other, to help people stay focused on their strategy?
Yeah, and I think that's a key word there, stay focused on the strategy, because I think when reporting season comes, it does a lot of to people's psychology, because then you're starting to see real numbers that have come out, and you start to question your decisions. But if you've backtested the stock and you've backtested your strategy and you're confident in that, then that gives you, that ability to just stick with it no matter what. And if your rule triggers to sell, then you sell, regardless of how the report came out. Really, that's for the long-term investors and those value type investors, which is nothing wrong with that, but they're looking, years ahead. They're looking to hold the stock for 10, 20 years in the future. If you want to be a trader, really pattern analysis and chart analysis, that's the way to go. And an interesting thing is that usually you see the patterns unfold before the report comes out, and then the report just confirms what you were thinking in the first place.
Exactly. And looking at that stock, you can see that it appears to have a long way to go if it continues to break above those peaks. So thank you for those tips. For anyone listening, you've just got to make sure that you've got the skills to do the back testing and be able to see those big picture patterns, so that in reporting season, there is no need to panic. You have a strategy, and that's the most important thing. Now, speaking of strategy, if you want to understand trends better, this is the best book for that. It actually makes it simple. Anybody can do it. How to Beat the Managed Funds by 20%. Dale wrote this book with a strategy in it. It's all about the trend following tool, and it's about trend lines and making a profit using trend lines, simple trend lines on a monthly chart, and he shows you how to do it. So I'd highly recommend that you have a look at this book if you haven't seen it. And someone said to me the other day, I don't have time to read a book, but a couple of pages every day, and once you get into a certain part of it, you'll want to read more, I can tell you that. So enjoy that book. Make sure you get a copy. All right, well, now we need to get into the next stock. We have AMI. Phil, would you like to take it away?
Yes, all right. AMI on the screen now. And I mean, this is another one when I look at this, it's important, and I know we've had conversations about this, to distinguish what type of stock is this, how do you put it in what context, what portfolio? Is it a trading stock? Is it a growth stock? Is it for my super? And when I look at this one, automatically I can see it's not a growth stock for sure. This is really a trader stock. And it's very exciting when you know where it sits in the landscape, because when you look at it and you apply some levels, you see 18 cents, and then we push through and put a few more levels on this stock. And I'll add the third level, and the reason I want to do this is just because right now you've got a real roadmap, right? And you've got 18 cents where this stock has really found support for its entire history. We're coming into a level where it's found a bit of a resistance in the past. So this really allows you to play those ranges, because people say, oh, I don't want to be trading range-bound stocks. But sometimes they're the cleanest runs and the cleanest opportunities. And knowing that with a cyclical stock like this, well, it's very simple. Right now, as long as it gets through this level here, there's really an opportunity for this one to continue on to around that 66, 67 cents. Fails here, then I would think potentially at 18 or 17 and a half cents, wherever that is where this one's about to get to. But what I really like about it is on each of these trends as they've unfolded, you can see, and we talk about this so much, and I hope this show at least paints that reality for people in that watch how these trends start, from September 2015 to October 2017, 2 years, and the stock's struggling to get going. You get about a third of the way up the trend, and look how powerful that run is. You see it again through here, December 08 to 2010. 2 years of not great price action until the market decides it's time to get running. We sit in that same time period again. And this is where a lot of people get tripped up, new people to the market that think I need to buy the low. Well, you're going to buy the low and you're going to get stopped out, you're going to get wild price action, and you're going to say, well, technicals don't work. Well, no, think about where you're trying to get involved in the market and know, the cycle of things. So given we're about 2 years into building this base, I think if we can take this 35, 36 cents out, you're probably going to get a really nice clean run, actually. So it's about preparing and getting that strategy right so you get on it, because the last thing you want to do is wait all these years and then miss an opportunity. But yeah, it's got to get through that level first.
Yeah, I mean, it looks like some good upside there. I was just reflecting on the mentoring that you're doing with a large number of students at the moment. And I was thinking about this, and you'd have some traders that are wanting to trade for income. So, is this the sort of stock that would be suitable for that strategy? Yeah,
look, any stock, right? I mean, what variance of income is one looking for, really? Is it daily, weekly, monthly, quarterly? And so you find the stocks that fit that strategy. But more important than all of that is their volatility. Is there enough volatility? Is the spread right? And can you get in and out? Is there enough liquidity? And this stock definitely has enough volatility to give you moves, especially being cyclical in nature. So you've got defined levels where you can get in there with the best risk-reward type structure. So definitely these kinds of stocks for sure.
Yep, fantastic. All right, 29M is our next one. Pedro, would you like to do that one?
Yes, gladly. So this is another resource play. This is one actually in the copper, lead and zinc space. Also, I think dabbling in a little bit of gold. But what piques my interest is the copper part, because copper has been on a bit of a tear lately, and I do see further upside for copper. Now, looking at the monthly chart here, you can see that this stock came out, fairly recent, 2021, back here, and it did rise a fair bit up to that 2022 peak. It started off at around that $1.90, and it rose to $3.20. So it almost doubled. But then it went for this long downtrend over here, and this is really what happens to a lot of IPOs, and people that would have transacted in at that IPO level. Unfortunately, if they're thinking of a long-term investment, long-term hold, then they wouldn't be happy right now. So this is why, I always say, and I know we all always say this, is let the markets unfold before you participate. If you're participating back here, you don't know what the previous levels were. You don't know anything about the history, basically. So, it's hard to gauge. Now you've got some nice levels here that we can, work from.
Pedro, I've just got a question for you, yes. Just to interrupt you. Sorry to interrupt, but I just was looking at the chart, and I can see that this stock has spent most of its time falling. Now, for someone who is thinking about trading a stock that's been doing that, what sort of advice can you give somebody about how to handle this type of stock and what time frame to trade it over?
Yeah, that's a good question. So if you were in the stock during that downtrend, then I would give you a special word called stop losses, and which are very important. You don't want to be just dragging your feet and just burying your head in the sand, while that downtrend is unfolding and just holding it and becoming a long-term shareholder of this company when you're losing most of your capital. Now, the time frame, definitely the monthly chart is going to give you that perspective of when it's actually turning. Because if I change this to a daily chart, just say, and now I'm going to go to the end of this downtrend and have a look at around here in 2025, and you're starting to see it kind of trail along the side there. You don't know if it stopped falling yet. Yeah, sure, it's at 10 cents, but you're not quite sure until this long-term uptrend starts to unfold. And really, once you see the weekly chart starting to show those uptrends, and then you eventually see the monthly chart start to show those uptrends, then you've got that further confirmation that downtrend move has potentially finished with a high degree of probability. Now, we're still not sure. It could actually come back down and trade below. So this isn't probably a stock. I mean, we are talking about small caps here. This is what the show is about. So it's not for everyone unless you know how to read these charts, know a little bit about technical analysis. So this would be the levels here that I'd be looking at for more short-term level. I'd be looking at that 35 cents, or you could even just even that out to 30 cents and 60 cents around that range. If it does bounce off that 30 cents, could come back up and retest that 60 cents. But if you wanted to be a bit more of a conservative trader, you could wait until it breaks above that 60 cents. But yeah, definitely the monthly chart is going to be your go-to chart for this stock. And then to pinpoint your entry, then you go to your weekly chart. Now, I don't want to get too much into the strategies and things like that, but the weekly chart it's a nice little intermediate between the monthly and the daily that really gives you a lot of confirmation. And you can see that we've also got this nice little uptrend that you can apply here, and it's just trickling along then, higher volume as well. So this is definitely an interesting one, maybe not one for everyone, but it's something that if you're maybe you've had some experience in the market, you're confident, then you can have a go at trading this.
Well, with the knowledge and the skill, anybody can trade that particular stock. True, as Pedro's been talking about, and make sure you get those skills. All you have to do is contact us and we will help you find the right course to suit you. That wraps up our first round. We're there already and have more amazing stocks for you coming shortly. But now it's time for our trending topic. Phil.
Yes, all right. So the trending topic this week or tonight is the Bitcoin is in freefall. Now down over 50% with no buys in sight. But is this the moment Bitcoin does a 180 and springs back up? I want to dive into the chart and take a good look, Janine, because so many people are in Bitcoin. I see mainstream media, I see all media news talking about Bitcoin all the time. We've had the tariff situation happen overnight or a few days ago. Bitcoin got thrown in the picture saying, okay, it's falling because of the tariffs now. Or, before that it was because of what Trump said or because of, and really when the story started about Bitcoin and there was this theme going through that it's digital gold, it was measured in some circles as a competitor to the fiat system, where you park your money, flight to safety type thing.
Well, that's what Trump's trying to create, isn't it?
Well, let me show you something right now to see the reality of things, because with Bitcoin right now, I mean, I was talking about this one a few months back, saying if it repeats the previous cycles, Bitcoin could very well go down to $20 again. And I'll explain why. But before that, I wanted to show a comparison of what a flight to safety asset does during volatility and what one should do. Now, overlaid, I've got gold. Gold is a flight to safety asset. As we know, during uncertain times, people flock to gold. Now, gold's trading at all-time highs, and look at the line of gold's trajectory. Bitcoin is doing the opposite. So I want to quell those beliefs out there if people still think that this is moving in the same vein of it being that, which it's not. And
it's a perfect pattern. I mean, Bitcoin is doing the perfect pattern that we talk about in our course. Yeah,
it is for sure, definitely, and we teach this stuff. So I'm probably, giving a little more today. I feel a bit nice, but the point is to show.
What happened over the weekend?
I don't know. I maybe had too many scotches, but what it proves is that the market is timely as well. And if you go through Bitcoin over its history, and you'll see that, I don't want to zoom in too much, but every 32, 33 months, if you measure from a low to a high, this market has found a significant top and then reversed. And literally on the most recent example, we got to 35 months, bang, hit the high, which is why we were so confident to say, well, generally this is probably, and the way it was unfolding was also telling us that this is going to go for a run down. Now, $60 has been thrown around that it could bounce from here, and it very well may do. But if you go through the history of the way Bitcoin has unfolded, and I'm not seeing any buys in sight, by the way. I mean, this is hugely bearish.
Yeah, you're saying it could go lower.
Yeah, and if we just go to that weekly chart and have a good look, you know, the three major corrections that Bitcoin has had in history is this one through here, where it fell 87%. Our second one, which was back in 2021, and that fell 79%. And the current one we're on right now is down 51. And if it goes down to 80, we're talking $25. And what's really interesting about this, I'll just finish off with the other most important bit of information that gives you an inkling in terms of what comes next, is the volume. Look at the volume where it was hugely active right at the all-time high back in 2017. The second period at this major peak here before it dumped. Third time at this major peak before that, you know, the fake rally, if you will, and then got dumped. So every metric is lining up to say that Bitcoin's going to go lower. And so, you know, I just wanted to raise that because there's all this talk about, do I buy now? Do I buy the dip? Maybe it hasn't finished. It's run down for me.
Yep. So what did you say the price was of Bitcoin? So
right now it's $60. Sure, it may find some support around $60 to $50, but history tells us this could go down to the 1,000. This could go down to 20 to 30,000 if history repeats, and just know that it ain't a flight to safety. Yeah, that's all I'm saying.
That's really good advice. So just remember that, all of you out there who are following Bitcoin, or maybe you've invested in it, this is where it gets really serious, and where the value of having that education now is so critical. So, and if you want the skills to analyse stocks or even Bitcoin, just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. And guys, you're going to have to choose your favourite stocks. So I'm just giving you a quick reminder. I've already chosen mine.
Okay.
Just to let you know.
Without seeing the last four,
Without seeing the last four.
Must be good. Yeah.
We'll see. Now, let's have a look at SBM is the first one. I'm going to let you go first, Phil.
Okay, sure. St. Barbara's. Now, this is a gold stock. If you're not aware, I'll keep it on the monthly chart because, again, you know, St. Barbara's, unlike some of the other gold players, you can see it's only now starting to get going, and it's really interesting where it's sitting. I see right now a bit of resistance where we're at. You know, there's been a huge price of greens back in 08, and you can see how it's bounced off those levels. So watch this 81, 82 cents very closely. I think when you're talking about the next risk-reward opportunity, it's got to get through here for me. Maybe it doesn't make too much sense right now, but if it does, I think.
How long did it go up for each of the previous times? I mean, was it a couple of years?
So it's gone up from 14 to 18, and then from 03 to 07. Yeah.
Yeah, so along that bull run, it's doing the same thing.
Yeah, so let's see. I mean, obviously, you know, the precious metal story is just, it doesn't seem like it's going to end anytime soon. But looking at this, I mean, there's definitely a really nice opportunity from 80 up to that $1.50 mark. Right now, you know, it's doing all the right things. Strong base, expansion. I would like to see how it reacts around here. That's the only thing. But definitely in an uptrend, this is one. If you're not watching and you want gold exposure, right? Because how hard has it been over the last couple of months if you want gold exposure to get a really nice setup?
Because they're all trading up. But with this one, I mean, it does look nice. Are they too late to the party, or is it wait for a pullback, or what's the?
Yeah, I think it comes back to what type of time frame you're looking to trade this stock. If you were more short term, I'd say yeah, maybe a little bit too late. But if you're medium to long term, I think you're not late at all. It's just about how you structure it and where you place your stop. If you do, if you don't, then, you know.
I mean, I was looking at those previous runs, and the biggest part of the rise looks like it's happened in around 6 or 8 months.
And so it's likely
yet to come.
Yet to come, yeah, that's right.
Very interesting one there. Maybe I should change the one that I picked. Oh, gee, this is too hard, isn't it? What about M16 for you, Pedro? Would you like that one?
All right, Janine, let's see if I can change your mind here. So next up we have MI6, which is a Minerals 260. Now, these guys just came out with an announcement, actually. This is why the price has shot out today. You can see here, it is currently up at around the tune of 40%. They've just secured $220 million in funding for their gold project. So this is another gold miner. And also they mine battery precious metals as well. So that's a little nice side note. And do note that, you know, a lot of rare earths, they're a byproduct of mining for gold and other precious metals. So it's not like that you actually have a rare earth mine. They're usually a byproduct of these precious metals. So let's start on the monthly chart here. You can already see that it's gone for a huge run since September 2025. It's currently up from that low, currently up 340%. But don't let that put you off, because it can definitely go more. It hasn't reached the all-time high here of 80 cents. And yes, it is, you know, still pretty low. That all-time high, it hasn't even made it to $1. So that probably rules it out for you, Janine. But still, hey, you know, it's still developing. It's 50 cents at the moment, 58 cents. Let's have a look at the weekly chart, because that's going to tell us a little bit more. And this is what got me a little bit more interested in the sense that it's done a few little sideways moves and then shot up. And then now it's done a very similar move here and now shot up. And each time that it's done that, if I measure it from this consolidation period, you know, that low there to that previous high, it's gone up 95%. It doesn't look like much here on the chart, but, you know, 100%. If we were to project that out again, and if it is going to do another 95%, then we could expect it to go up around that 76 cents, which is very close to that previous all-time high here. So it could actually go up to that 80 cents. Now, how much more from the current level does it have to go up to that 80 cents? Well, it's only around 32%, but that's a pretty nice return if you can get this trade right. Now, of course, there is a risk, as always with trading, that it could come back down and fill that gap especially. And we've got 33% to that previous low if you were to set your stop loss there. So it's a little bit even at the moment, I would say, the risk to reward ratio. So maybe now it's not the perfect time to transact. I would maybe see, wait to see if it kind of comes back and fills that gap. But I think long term, this one is looking quite nice because it's definitely turned a corner. You can just see here by the amount of volume that's come into it. It comes, the volume increases and then subsides, increases, subsides, and then now it's in a bit of an increasing cycle at the moment. So I actually do quite like this one. I think that there's some good potential, but I'd just wait a few more weeks to let it unfold.
Okay, so some really nice entry opportunities were along that run, and that's the importance of understanding trends and learning how to read those, and thank you very much for that one. Good that you talked about the risk, so important given that it gapped up, because I was actually remembering, that made me remember a story that with one of the students that we worked with many years ago, and he had this stock and he'd done all the preparation for it, and then the stock gapped up at reporting season, and so he's left there thinking, well, okay, my rules have triggered and now I need to, use what I've been taught to make a decision about that, weighing up both sides of it. But most people then don't know how to make that decision, and I think that's the important difference in what this gives you. So just remember that. If you need help and you're a bit perplexed in reporting season because stocks jump one way or the other and you don't know how to manage them, then you really need to give us a call. Now, ELV is the next one, Phil. You've got that one under...
Yes. This is probably more for Pedro, this one.
Oh, is it?
Yeah, but I'll do it.
Is it energy, or is it because it's a small stock?
It's a lithium stock, and it's the lithium story has been so intriguing. I know I've had so many friends of mine over the years tell me, lithium, and this was many years ago before lithium started making a move in the last year. And it's always been, something that we joke about. But when you look at the price of lithium, I think now for the first time in a long time, I can say that, hey, something is moving. It's definitely looked like it's turned the corner. So
did you prefer gold or other metals to lithium stocks?
Oh, look, gold has been the obvious winner. Gold, silver has been a really, platinum even, but lithium is, we've had Rio Tinto last year actually get involved with Arcadium Lithium. So they put their money where their mouth was, and that was when lithium was at all-time lows. So from that moment, I kind of got interested, thinking, okay, well, if you've got some big players starting to pour in here,
it's a good way to look at it.
Yeah, we might see some movement, and we did. But how that translates to lever, I believe it's called. You've got to always remember that regardless of commodity and macro theme, we're trading the underlying stock. And sometimes people get caught up in this. They think, oh, gold's going up, so I'm going to buy this gold stock. But each gold company has a different structure, has a different cost of production. Just because the gold price is X doesn't mean it's going to translate to this company like it does another company. And so don't get caught in that trap to think, okay, gold's going up, so I'm just going to buy any gold stock and expect it to do the same, because it's not always going to be that way. But let's go to that.
So that's where you need some good rules to know when the time is right.
Exactly, and it translates with lithium, because most people that I know anyway would say, oh yeah, what's a lithium stock I can buy now? I don't care, I'm just going to buy one. May not work out.
Too risky.
May not work out for
Well, they have no idea how to get out of it, and look at the volatility on that left-hand side chart, and then all of a sudden it came all the way back to where it started.
Yeah, now look, that being said, it's actually starting to move, so I might have to take back what I'm saying. But I'll go to the weekly chart here, because a few things are popping out to me, and it's obvious. If the big end of town is going to get involved, you're going to need to see an uptick in volume, and we're seeing that. So that's a plus. We haven't seen this kind of volume consistently ever. We've seen upticks before, but not consistently for 5-6 months. So that's good on the breakup through here, and I think now this becomes an opportunity where, yes, you take the trade where you see, the levels, and there's one definitely up around here. So this could go for a run to potentially around the $20. But if it doesn't, I think it's also important when you're trading these stocks is to accept that you're in a high risk environment, accept that it could gap down, accept that it may be driven on just pure speculation and momentum. And you could be wrong, more so than if you're trading the large caps with more stable growth. And I find that's one thing that's so important, because oftentimes, you get people that play in this space and they're not willing to accept the kind of risk.
Yeah, I mean, it's a challenge for traders who are going from being more of medium to long term to then go short term, and then thinking that they've got to trade that, really small stocks to do it, which they don't. But I mean, these are some examples of ones where people could do it, but at the right time. But, does someone really have to trade a lithium stock to make an income? No,
and I think it's probably the other way around. It's been confused. Like you said, trading the large caps short term offers you so much more in terms of liquidity, in terms of, clean price action.
They're not going to just drop 50%
Correct.
in a few weeks.
Yeah, and if you are looking to trade the small caps, I would say take more of a longer term approach, because you don't know when that news is going to come out. You don't know when the institutions are going to get involved.
But timing's so much more critical on these ones.
Oh, I think for all. I mean, it's timing for everything.
Look at the falls, some of the falls.
Yeah.
It's like, 30, 40% in just a matter of, a couple of months.
And you can get stuck in the stock doing nothing for a long time. Like, just imagine you're saying, okay, it's at all-time lows in July 2019. I'm just going to hold it. And, this is an example where, okay, it was 1 year.
Yeah.
Some stocks go for 10 years on the lows and nothing happens. So you've got to be thinking about the opportunity cost and, like you said, get the timing right. So right now, I think this one here, as long as it holds this low, the January 26 low, is definitely in trend, and there's something to work with. But that selling that come through is not too exciting. It's got to get back above $10 before I, thought more of it. So still some more good opportunities out there, just at the right time. That's ELV. Now the last one we've got, Pedro, lucky last for you, BRE. Impress me.
All right, let's see if I can impress you here, Janine. This one's looking quite nice. So on the chart, we have Brazilian Rare Earths, BRE. So no introduction needed. It's a stock that's in the rare earth space. And this company has actually been primed to be an alternative developer outside of Asia. So they not only extract rare earths, but they're looking to develop them and actually, export heavy rare earths, which are basically, the magnets and things like that we need for technology. So, that's where the real value add is with these types of companies, not only extracting them, but actually developing them. So let's have a look at what's happened on the chart here. IPO'd this looks much different to that other stock that we were looking at earlier that, basically fell from the IPO. It did rise. It came back to the IPO level back in 2025. And then now it's gone for a beautiful run. So from that low, it went up 260%. Now it's currently sitting at around 208% up from that low. But I love the manner that it's done this. It's followed this, up, down, up, down. And if this is the low at the moment, then we could be up for another leg, another rise. And if we measure the percentage rise that it did from this high to that high, so that's 55%, and we project that out to another 55%, and we have to go pretty high to do that. We could be looking at around that $9, $9 to $10 basically that it could run up to. So I'm liking the overall structure of the way that it's unfolding. Now, going to the weekly chart, again, it had this down movement, that down momentum, and then it just shot up. The way that it did it as well, forming higher highs, higher lows, it gave you a lot of opportunity to participate in, to actually determine whether this is turning or not. It went up, and then now look what's happened. Again, it's had this downward momentum, and now we've got that initial rise just up above. Very similar to what we had here around April 2025. We've had that initial pop-up of the head around there. So it could trail sideways for a little bit before it takes off. But I think that this one is looking very, very interesting. Higher volume, again, like we're seeing with most of the ones. That's a bit of a trend that I've seen with these small caps, that we are seeing a lot more volume come into them. And that's generally something that you see, once all the money has gone into the larger caps, now we're seeing interest into these small caps. So this one is very nice. And just one final thing, just to put a nail in the analysis, that it has found support at a very critical level at around that $3.50. So it bounced quite nicely of it, as we would assume, and now looks to be primed to take out the all-time high at that $6. So very interesting, this one, and I'll definitely be looking at this for a short to medium term trade.
Well, Pedro, you didn't let me down. You sparked my interest. I do like the look of BRE, but first of all, I'm going to go to you guys to find out which one you like. Phil, come on.
BRE, yeah.
BRE, you went for?
Easy choice, yeah.
Okay, is that just the one you remembered?
No, it actually looks really good.
All right, Pedro, what about you?
I'm going to have to join the wagon, BRE all the way.
Come on, if it wasn't BRE, what would be your second choice?
All right, second choice apart from BRE, they're all quite good. I would have to say Saturn Metals. Saturn Metals is very interesting at the moment. If it breaks above that 58 cents, then yeah, I like that one.
All right, well, I'm going to be different. I liked AMI. That was my choice. And if not, SBM, I think it was. Yes. Looked good as well, just potential opportunities there. So remember, with some knowledge and some understanding and building your skills, then you can trade anything as an individual, and that gives you total freedom in the market. Now, moving on, shortly we're going to get into our hot stock tip, which has had big earnings news today. But first, let's answer your questions. Now, I have an email here from Aninja, writes, I was reviewing the worst hit stocks in my portfolio and wanted to sanity check my chart reading. I like that terminology. For SGLLV, would you be watching 1335 or 1145 as the next meaningful support? Also, lesson learned on Temple and Webster, I entered at 2260. And I'm thinking midterm hold, but do you see a major support zone near 320, or is there another level you'd focus on first? Now, lots of questions in there for you, Phil. What would you like to tackle first?
Look, normally we do one, so I think Temple and Webster is the more important one because she's already bought it. So we can go and take a look at Temple and Webster. Now, this is quite an interesting scenario, Aninda. I'm not sure if this is new for you, buying a stock. Because one thing is for sure, if you had come to us, there is no way you'd be holding from 2260 all the way to now. and probably no way you'd be buying at 22.60, to be honest, after the way it's run. So yes, potentially there is support at $3.20, but I think the most important thing here is that the biggest lesson you take from the market is that just because the stock is rising doesn't mean it's time to buy. Same goes for just because it's falling doesn't mean it's cheap. And there is real skill and knowledge in knowing how to get in and out at the most opportune time so you can, get profit from here, because you don't want to be repeating this type of, stuff in your portfolio and thinking that it's okay or it's normal, because it's destiny for failure for me and getting wiped out. And so that's something to think about. I say, okay, even if it falls back to $3.20, so what? Are you expecting it to go back to $22 straight away? I'm not so sure of that. It may never get back to $22.60. So then what? So I think the lesson is the most important thing here for me, in that timing is everything. Contrary to what you may think, timing is everything.
Yeah.
And one bad trade like this can wipe out 5, 6, 7 really good trades.
Timing is everything, and risk management.
Absolutely. And they go hand in hand. If you can work with the timing, you can, work with the risk management on a much greater scale.
Yeah.
And so, the best way to answer that is if you have ever thought about getting educated, if you're watching what we're doing here on the show, then please, these are the moments and the examples that, wake people up and go, maybe I don't know as much as I need to know to trade the market. So, go check that website out, and that's all I can say.
Yeah, and India, I think I'm feeling a little bit, sad in a way, but I just like the fact that you asked whether we thought that it would find support at that level, and you've looked at the chart at least to understand where the levels are. So congratulations on actually looking at what's important on the chart and trying to understand what the best way is to go from here. So it's really, like Phil said, it's one of a risk strategy. You've got a number of choices. Simply write down the pros and the cons. This is what we teach people when they're going through the process of making decisions. Write down the pros and the cons for making a decision to stay, and write down the pros and cons for making a decision to sell. So it's with you on that one, but I hope you come and talk to us at some stage. Now, Iqbal's email is next. Would love your thoughts on Blue Glass Limited. I find it interesting for the following reasons. Given the increasing tensions between the US and Iran, it is notable that Blue Glass recently announced $1.05 million. That's Australian dollar year 3 clause hub contract extension with the US Department of Defence on January 30, 2026. The price is currently near an all-time low, yet there has been a significant increase in trading volume over the last couple of weeks. Now, this is an interesting one. Pedro, would you like to tell us what your thoughts are on this one?
Yeah, sure. So Blue Glass, these guys are in the laser photonics sector and sections, and they, they've come out with news back in November. I remember that they were consolidating some shares. So I think that's why the share price has shot up. It hasn't actually been that people were, willing to pay more for it. They've actually consolidated, and recently they're issuing more shares as well. And I can see that, yes, they have had that recent contract. Now, for me, trading something like this is highly speculative and dangerous. You can see just the way that it moves, and I would urge you to have a look at the charts of the stocks that we were looking at, that we were actually liking, and notice the difference between the way that they move from this one. Around this period, it looked a little bit more normal, but the way that it has these periods of just sideways, basically nothing happening, and then a spike comes out. This is a telltale sign of a company that's still finding its feet. It's still finding, what it is, and finding its way in the market. And all of these spikes would be news related. So if you're just going to be waiting for news to come out for somebody to pay more for the share, then you're playing a dangerous game here. It's hard to trade this technically. So this latest spike up, like I said, it was a bit of a consolidation in shares. Now it's moving down. This is the monthly chart, by the way, and it is very much pointing down. So I wouldn't be too excited about this one. On the weekly chart here, it does look like it's finding some some support, but still very dangerous.
Pedro, that's some really good advice. I mean, at some stage, you know, we train traders on how to look for stocks, and stock selection is often one of the biggest challenges when people come to us saying that I want to be able to select stocks and know how to do that. So when you're looking at a stock like this, Pedro, you know, what advice could you give someone if they did want to trade a liquid stock, say, like this one or something else, as to when is a good opportune time to get in?
When basically you're seeing a mature trend. And what I find, a lot of traders that come to us and that are playing in this market, they always try to hit a home run, right? They always go, you know, imagine in baseball, they're always swinging as hard as they can, trying to get those big runs. They want to trade these specky type stocks because they want to make these types of returns. They want to make 1,000, 2,000 returns. Now, I can tell you, a trader doesn't hit home runs all the time. A trader is steady. You know, you get to first base, you get to second base, you get to third base, and then you go for the, you know, for the home run. So that would be my advice. You want to be a consistent trader. Play in a different field first. Don't play with these ones that will just wipe you out, because I've showed you the upside. Imagine if you would have bought up here, you'd be down 46%. And we saw what happened before with Templar and Webster, with the previous.
It doesn't take long. It doesn't take long to wipe out the potential return, does it, or wipe out the whole lot?
Exactly.
Well, thanks for that. It's very, very sage advice. Now, David is next and writes, I was hoping you could cast your expert eyes over Acro, please. It had a great run out of the COVID low and then has been consolidating for the last 2 years. I'm considering an entry at $1.20, or would it be better to wait for a break above $1.20? He's considering all of those important points. What do you think, Phil?
Yeah, I like it. Let's go to the chart. The only thing is when we bring up the monthly chart of Acro, you can see that this is not a very liquid stock. It's been falling from July 11, and it's common with these liquid stocks. I'll bring out the monthly chart, but you know, all the way down and then a long period from 16 to 2025 of nothing. But now we're starting to if I zoom it in, we're starting to see a little bit more structure in the way things are unfolding. Very liquid in this early period. I think if you accept the fact that, yep, you know, you're willing to get involved in this space. If I tie back to the previous stock where the price was really just flashing up and down, this one has a bit more structure to it. And I don't mind the fact that, you know, he's looking at it and he's looking for an opportunity above 120. I think in terms of which one's better, well, you have to make that decision with yourself. You know, most people say, oh, do I wait for a move up and get straight in, or do I wait for it to move up and then potentially move back? Well, there's two what ifs there. The guarantee is at at 120, you're going to get in, and whatever happens next, well, you're going to get a piece of it either up or down. You don't do that and it breaks through $1.20 and goes for a big run up to $1.80 and never comes back to $1.20, well, that opportunity is now gone. So you have to live with that. Are you comfortable living with that? Or are you going to FOMO trade now? Are you going to try and chase it and go, damn, I should have got in. I'm just going to jump in. So these are the things you need to really iron out with yourself before you get in. There isn't a right or wrong answer in terms of...
What about reporting season as well, to add something else into the mix?
Well, there's that too as well, yep. But more so, you know, right now he's got a clear decision on how he wants to do it. One of two things: accept the pros and the cons of each one and make a decision. If you really want to get involved, 120 is definitely that break level. If you want to wait and see what happens on the other side, just accept that if it doesn't come back, you may never get involved in this stock. And you've got to live with that, and that's all right.
Yep, I think that's really good advice. Some important levels that you've identified there, so well done. Next is Alex, and he writes, I was looking for different ways to create exposure to commodities in my portfolio and was wondering what you all thought of commodity-backed ETFs, specifically gold, due to its history and similarity to the gold price on the chart, as well as the pullback that may be producing an opportunity for entry. I would be looking at a long-term move, possibly entering as price trades above 65.32. Pedro, what do you think of this one?
All right. So, you know, I'm not a big fan of ETFs in general, but if I was going to trade an ETF, I do like this one. I think that the gold ETF is a good way to get exposure to gold if you don't want to be holding the physical gold itself. I know a lot of people, they might be worried about, holding that physical gold in their home, or if you don't want to pay to store it somewhere, you can definitely get involved in this space. Now, buy above 65. Well, I like that there's a line in the sand and that there's an if, because that's definitely what trading is about. You say, I'll do this if this happens, and I'll do that if that happens. For me, I mean, it says buy above 65.32. It's already above that price. So he's probably bought in already, because this is this week. Let's go to the daily chart to see what's happened. Yeah, so he must have wrote in last week, because Monday it's already gapped up. So hopefully this advice doesn't come too late for you, mate. But and you would have already bought. But I can see the logic behind it, because gold does tend to have these consolidation periods, or these little bit of a pullback, and then the rise, and then now it's had that pullback, and he's looking to get in on that next rise, and it does it time and time again. My only concern is that it is quite vertical right now, even though it is gold, and yes, we're printing more money and all the fundamentals are in place, but at the end of the day, it's a market where people buy and sell. So it's still prone to the emotions of the market. Right now, the emotions are very high. Everybody's looking at gold. It's everywhere. So this is probably a dangerous time to be looking at this. I would say, but I have no problem with the actual technical rule itself.
Okay, so it's a runaway train that could stop at some point. Is that your concern, or is it just that the person who is talking, who's raised this, may not have the strategy to be able to exit it, given it's gone so vertical?
Yeah, and that's what we see a lot of people do, and especially when it comes to gold, they'll say, well, I've bought this, it is gold, I'll just hold on to it. But also remember that ETFs are a synthetic product, so you're not holding anything of intrinsic value. It's just mirroring the price of gold. Whereas, if you're holding gold itself, if you do have that downturn, at least you're holding something physical. But another reason is I'll quickly go to the monthly chart here and just have a look at this period. I'll just expand this one out and go to the monthly. And we haven't had any months, any down months, basically since June 2025. And there's just too many green bars. And I'll even go a little bit further and go to the yearly and have a look at this. And let's just squash this out so you can see really what's happened. Have a look at, there's no down move at all. That is not sustainable. When a market is this vertical, it's at breaking points. Of course, yes, there could be something that happens where reserve banks start buying more gold and it goes even more vertical. But I mean, is that a risk that you're willing to take? There could be other markets where you can make your money that way. It doesn't need to be gold.
So climbing the wall of worry, thanks for your insights. That's fantastic. Now it's time for our hot stock tip for the week. Pedro, would you like to share this? I know that you're itching to actually talk about this stock because you've talked about it on the show before. Can I say the hot stock tip, or would you like to say what it is? I don't want to ruin your thunder.
I don't mind it. Look, I'll just say it. It's Woodside, and I'm not going to say I told you so, but I told you so. Basically,
no surprises for us here.
Woodside. I mean, we've been talking about it on this show. We've all covered it. We've all been watching it very closely, and it's been doing a setup that we quite like. And now they've just recently come out with their report, and this is why we're covering it as a hot stock. They delivered record production in 2025, but lower oil and gas prices pushed net profit down 24% to 2.7 billion. But that's the key thing here, because the oil and gas prices is what pushed their profit down, but their costs fell. Their free cash flow jumped to 1.9 billion, and the company maintained a strong 80% payout ratio, returning $2.1 billion to shareholders. Now, major growth projects remain on track. Overall, this is a solid operational result despite weaker prices. So slightly soft on the headline profit, but strategically positive for the company moving forward.
So well
that,
done,
to
Woodside.
me, is the key thing here.
Well done, Woodside,
exactly,
and they
well
kept
done.
a lid on that, didn't they?
They did, and we could see on the chart that something was brewing anyway. But what I like is that even though we had soft oil prices, and oil prices have basically been trickling along the 55 to $65 a barrel, which is on the lower side. They've been trading at that for the last couple of years, yet Woodside has still managed to have a great result and actually increase their cash flow and return it to shareholders. So now moving forward, and this is the key thing, oil prices are looking set to have a bit of a run. Look what's happening, over in America with Iran. If the Strait of Hormuz, if there's been a bit of a conflict there, then obviously oil could go for a run. Now that means that in the next reporting season, Woodside will probably come out and be much more profitable, seeing that they'll have a higher cost of oil that they could sell to. So now let's get onto the chart, because this is really where our expertise lies. Let's start with the monthly chart here. We've been looking at this ever since we thought that it could have rebounded off this fall, and it was forming an interesting sideways consolidation. But the key critical factor is here, that it has now popped its head above $27. That $27 was the key determinator here for that continued rise. And now that is very positive. And at the moment on the weekly chart, it's trading to that high. It's actually going to close. If it continues on for this week, it's going to close above that high. So I do quite like the fact that it's broken out of that sideways range. And I think that we could be, primed for a possible retest of that $38 level, which represents a fair bit of upside now. If we're going from that previous high, that's 42%. For a company that's in the top 20 and that is stable, that it's not going to go under anytime soon. That it's not going to, get sold off quite heavily. I think that's a nice way of getting a nice return with a nice, positive and safe company. So there's that $27. I would expect maybe in the short to medium term for it to maybe find some resistance at around that $30 level. It's also a psychological, round number, but I think that it's going to be range bound, possibly around these two levels before possibly, taking out that $38. But
now,
all in
Pedro,
all, great results. And
I thought you were actually going to run out of breath at some point, but you didn't. And I could feel the excitement in your voice when you're talking about this stock, because you've been waiting for this star moment. And congratulations. Maybe I shouldn't be saying congratulations to Woodside. I should be saying congratulations to Pedro. Well done. So enjoy the moment. Now, if you want more from us, check out our video, Oil is Old News, Gas is Exploding, 8 ASX Stocks to Buy.